Okay, so everyone get ready, because today we are going deep on tariffs.
Yeah, terror.
Specifically,
Hmm.
we're going to be looking at this really strange 90-day pause that was announced on April 9th, 2025.
A lot going on.
Yeah, so much going on with tariffs, it's hard to keep up.
Absolutely.
And if you're anything like me, you've probably felt a little overwhelmed trying to figure out what's going on.
Totally.
But don't worry, that's what we're here for.
That's right.
We've been doing a ton of reading, looking at all kinds of sources, trying to figure out exactly what this whole thing means.
We've got news articles. We've got economic analyses from some real experts, these think tanks.
Yeah,
We even looked at some government reports, which are always a thrill a minute, let me tell you,
solace.
to try and make sense of this for you.
Exactly.
So you don't have to wade through all that yourself.
Yeah, so today we're basically going to try and answer three big questions.
Mm-hmm.
First, what led up to this tariff pause? Like, what was the background? What was going on?
Mm-hmm.
Then we'll dive into the pause itself. Like, what does it actually mean? What's the fine print?
The details.
Yeah, and finally, we're going to look at how the markets reacted because, oh boy, did they react.
They sure did. The markets do not like uncertainty, and there was a lot of it flying around.
Absolutely.
So buckle up. It's going to be a wild ride.
All right, so to kick things off, let's do a quick recap of recent tariff history.
Okay. So,
I mean, this whole tariff saga, it's not exactly new, right?
no, not at all. If we go back just a few years to 2018, that's when things really started heating up.
Right, the previous administration.
Yeah, the Trump administration, that's when we saw those Section 301 tariffs that were specifically targeted at China.
Right. A lot of concern about unfair trade practices.
Exactly. Things like intellectual property theft
Yeah.
and forcing U.S. companies to hand over technology just to do business there.
And then on top of that, there were the Section 232 tariffs.
Yeah.
Those were on steel and aluminum imports, and those were global,
Right. Pretty much everyone got hit with those. The argument there was national security.
keeping those industries strong here at home.
Right. And those tariffs were pretty significant, like 25% on steel imports right off the bat.
Yeah, those were definitely big moves that got everyone's attention.
For sure.
So then fast forward to the new administration, and a lot of folks were wondering, are these tariffs going to stay or are they going to go?
Yeah. Was this just campaign rhetoric or was it policy?
And as it turns out, they mostly stayed put, didn't they?
They did. And in some cases, they were actually increased.
Right. And this is where things get interesting because the Biden administration, they started using tariffs in a very strategic way.
Yeah. Much more targeted and focused on specific industries that they wanted to boost.
So it became less about just punishing other countries and more about actively trying to support certain sectors here in the U.S.
Exactly. And a good example of that is what happened with electric vehicles.
Oh, yeah.
Those tariffs went from 25% all the way up to 100%.
Wow. So if you're a foreign company trying to sell EVs here, you're facing a massive cost increase.
Yeah, it's a pretty clear signal that the U.S. wants to be a leader in that industry.
Makes sense.
And it wasn't just EVs, lithium-ion batteries, semiconductors, solar cells, all those saw significant tariff hikes as well.
And all those are pretty crucial for, building a clean energy future.
Absolutely. So it really does seem like there's a clear industrial policy goal here.
Right. So it's not just about trade anymore. It's about shaping the future of certain industries.
Exactly.
Now, there were ways to get exemptions from these tariffs,
Right? Companies could apply for exclusions for specific products.
but those were pretty limited, weren't they?
Yeah. A lot of the existing exclusions expired, and the process for getting new ones was pretty tough.
So the message was pretty clear. They were serious about using tariffs to achieve their goals.
Yeah, this wasn't just a temporary thing.
So that was the situation leading up to early 2025, and then things got really interesting.
That's when things went into overdrive.
Yeah, it's like someone hit the fast forward button on the whole tariff saga.
Definitely. And it started with the Section 232 tariffs, those ones on steel and aluminum.
Right. Those are the ones that were already in place.
Yeah, well, remember how we said there were some exemptions for certain countries?
Right, like special deals for our allies?
Exactly. Well, in February 2025, those exemptions were all revoked.
All of them.
Gone poof, just like that.
Even for the EU.
Especially for the EU, they had this tariff rate quota, or TRQ, that allowed a certain amount of steel and aluminum to come in without tariffs.
Right.
But that was scrapped too.
Wow, so no more special treatment for anyone.
Nope. Everyone was back to facing those 25% tariffs on both steel and aluminum.
And to make matters even more complicated, they expanded the scope of those tariffs, didn't they?
They did. Instead of just targeting raw steel and aluminum, they started going after derivative
So
products.
things made from steel and aluminum.
Right, so now you're talking about a huge range of goods, from car parts to appliances to construction materials.
And I'm guessing this didn't exactly go over well with our trading partners.
Not really. There was a lot of pushback, especially from the EU and Canada.
Yeah, they felt like they were being unfairly targeted.
And it wasn't just about the tariffs themselves, it was the way it was done.
Like the suddenness of it all.
Exactly. It felt very abrupt and unilateral, like the U.S. was just dictating terms without any real consultation.
Not exactly a recipe for smooth international relations.
No, not at all. And this was just the beginning.
Okay, so we've got these expanded Section 232 tariffs causing a lot of tension, but then comes the really big curveball, the IEEPA tariffs.
Yeah, this is where things get really interesting and a little bit confusing.
A little bit.
Okay, maybe a lot confusing, but we'll try to break it down.
Please do, because IEEPA, it sounds like something out of a spy movie.
Yay! It does, doesn't it?
International Emergency Economic Powers Act.
That's the one.
And this is usually used for like serious sanctions, right, targeting specific countries or individuals.
Right, like in response to terrorism or human rights abuses.
But in this case, it was used to declare a national emergency over trade deficits.
Yeah, basically saying that the U.S. buying more stuff from other countries than it's selling to them is a threat to national security.
So basically a national emergency because we like to shop.
It's a novel interpretation for sure,
A little bit of a head scratcher.
to say the least.
So how did this IEPA declaration actually translate into tariffs?
Well, it was a two-stage process. First, on April 5th, they slapped a 10% tariff on pretty much everything coming in from almost everywhere.
10% on everything except for...
Except for things that were already subject to the Section 232 tariffs, like steel, aluminum, and autos and parts.
Right, they want to double dip on those.
Exactly. And there were a few other exceptions, like copper, lumber, semiconductors, pharmaceuticals.
Interesting. And those last two, pharmaceuticals and semiconductors, those had been mentioned as possible targets for future tariffs.
Right, so it's almost like they were giving a little preview of what might be coming down the road.
Okay, so that was stage one, a 10% tariff on pretty much everything coming in from pretty much everywhere.
Right, kind of a blanket tariff to start things off.
And then came stage two.
Stage 2 was where things got really targeted.
This is where the reciprocal tariffs came in, right?
Yeah.
So what exactly does reciprocal mean in this context?
It means that the U.S. was aiming to match the tariff rates that other countries were imposing on U.S. goods.
So if another country had a 20% tariff on a certain U.S. product,
Then the U.S. would put a 20% tariff on a similar product coming in from that country.
an eye for an eye, a tariff for tariff.
Exactly. The idea was to level the playing field, or at least that's what they said.
But of course, it's never that simple, is it?
Not really, because in practice, it's very hard to perfectly match tariffs across different products and industries.
And not all countries play by the same rules.
Exactly. So while they called them reciprocal tariffs, there was definitely some subjectivity involved in how they were calculated.
So who ended up getting hit with these higher reciprocal tariffs?
Well, they applied to 57 countries that were deemed to have large trade surpluses with the U.S. or to be engaging in what they considered unfair trade practices.
And this included some of our biggest trading partners, right?
Oh, yeah, China, the EU, Japan, India, Vietnam, pretty much everyone.
And the rates varied depending on the country, right?
They did, yeah. China got hit with a 34% reciprocal tariff. The EU was looking at 20%, Vietnam, a hefty 46%, Japan 24%, India 27%, and so on.
So it was a pretty complex patchwork of tariffs.
Absolutely, and you have to remember that these reciprocal tariffs were on top of any existing tariffs that were already in place.
Except for those under Section 232.
Right, so it was a really complicated situation for businesses trying to figure out how much they were going to have to pay.
And all of this was happening against the backdrop of already strained relations with some of these countries.
Yeah, the trade war with China was still simmering, and the relationship with the EU wasn't exactly rosy either.
So you can imagine how these new tariffs went over.
Not well.
Not well at all.
There was a lot of anger, a lot of accusations of protectionism, and a lot of fear about what this would mean for the global economy.
And speaking of the global economy, let's talk about how the markets reacted, because they did not take this news lying down.
Oh, no, they did not. The markets hate uncertainty, and this whole tariff situation was creating a ton of it.
Yeah, it was like watching a roller coaster go up and down again.
Totally. So when those universal and reciprocal tariffs were first announced on April 2nd, the markets basically freaked out.
April 4th was a particularly bad day, wasn't it?
It was brutal. The S&P 500 plunged almost 5%. The Dow Jones Industrial Average dropped over 1,600 points. That's about a 4% drop. And the tech-heavy Nasdaq got absolutely hammered, falling by 6%.
So pretty much everything was down across the board.
Yeah, it was a bloodbath, and it wasn't just the U.S. markets. European markets were also down significantly.
The investors were clearly spooked by the prospect of a full-blown trade war.
Absolutely. They were worried about the impact on global growth, on corporate profits, and on inflation.
And all of this uncertainty was reflected in the bond market, too, wasn't it?
Yeah, we saw Treasury yields dip as investors flocked to safer assets, anticipating that the Federal Reserve might have to cut interest rates to try and cushion the blow of a slowing economy.
So it was a pretty bleak picture all around.
It was, and then came the plot twist.
The 90-day pause.
The pause heard round the world.
Just hours after those higher reciprocal tariffs went into effect, the administration announced that they were hitting the pause button.
Not on all of them, though.
Right. This is where things get even more interesting.
So for most of the 57 countries that were hit with those higher tariffs, the rates were rolled back to that initial 10% baseline.
So a temporary reprieve for the EU, Japan, South Korea, and a bunch of others.
Exactly, but there was one very notable exception.
China.
China was explicitly excluded from the pause. In fact, on the very same day that everyone else got a break, the IEEPA tariff rate on Chinese goods was more than doubled.
More than doubled. It went from 34% to a whopping 125%.
It was a huge escalation and a very clear signal that the U.S. was not backing down in its trade dispute with China.
So the olive branch was extended to pretty much everyone except for China.
That's right.
And this really highlights the complex geopolitical dynamics at play here, doesn't it?
It does. It shows that trade policy is often used as a tool to achieve broader foreign policy goals.
Right. It's not just about economics. It's about power and influence.
Exactly. And this is something that businesses and investors need to be aware of.
Absolutely, because the rules of the game can change very quickly.
They can, and that's what we saw happen here.
So how did the markets react to this sudden pause?
Well, let's just say they were relieved.
April 9th was a day for the history books, wasn't it?
It was the S&P 500 soared by 9.5%, its biggest single-day gain since October 2008. The Dow Jones Industrial Average jumped by nearly 3,000 points, a gain of 7.9%, and the Nasdaq 100 shot up by over 12%.
So basically all those losses from a few days earlier were completely erased.
Pretty much, it was a remarkable turnaround.
And this really shows just how much those initial tariff announcements had spooked investors.
Absolutely. They were clearly worried about a trade war spiraling out of control.
But then when they saw that the administration was willing to hit the pause button, at least for most countries, they breathed a sigh of relief.
And they poured back into the market.
Especially into tech stocks, which had been hit particularly hard.
Yeah, big names like Tesla, Nvidia, Apple, Meta, they all saw huge gains on April 9th.
So it was a risk-on day, for sure.
Definitely investors were feeling more optimistic about the future.
But this doesn't mean that everything is back to normal, does it?
No, not at all. There's still a lot of uncertainty hanging over the markets.
We're still in this 90-day pause, and no one knows what's going to happen after that.
Will those higher reciprocal tariffs be reinstated? Will the trade war with China escalate? Will there be new tariffs on other goods?
There are a lot of open questions, and that's what's keeping investors on edge.
And it's not just investors. Businesses are also trying to figure out how to navigate this uncertain landscape.
It's tough to make long-term plans when you don't know what the trade rules are going to be in a few months.
Exactly. And this uncertainty can have a real impact on investment and hiring decisions.
So the stakes are high.
They are.
So to wrap things up,
Yeah.
what are the key takeaways from this whole tariff saga?
Well, I think the main takeaway is that trade policy is now a major tool of U.S. foreign policy.
It's not just about economics anymore. It's about geopolitics and national security.
And this means that businesses and investors need to pay close attention to what's happening in Washington.
Because the rules of the game can change very quickly.
They can, and they probably will.
So buckle up, folks, because the tariff roller coaster is probably not over yet.
Not by a long shot.
And on that note, we want to leave you with a final thought.
A little something to ponder.
If the markets reacted so positively to this pause on tariffs, what does that tell us about the long-term viability of these kinds of protectionist policies?
Is this a sustainable approach to managing the global economy, or is it just kicking the can down the road?
It's a question worth thinking about.
Absolutely.
All right, folks, that's all the time we have for today's deep dive. Thanks for joining us.
And as always, keep those brains engaged.
We'll be back soon with another fascinating topic.
Until then, happy reading.
And stay curious.
Bye, everyone.